FY26. But that's DCB Bank for you. 2.5% lower today. But if you look at it over the last 5 days, it's been a stock to watch out for. Really on fire, that one. Let's pull up the 5-day chart and get a sense. There you go. 18.5% higher over the last 1 week. So some serious re-rating happening there. You know, where else, where there's serious growth, especially within banking, is Yes Bank. And we're joined in by Mr. Prashant Kumar, Managing Director and CEO at Yes Bank, to talk to us about exactly that, especially the numbers. Super strong growth. Mr. Kumar, always a pleasure speaking with you. First off, happy Diwali. Wishing you a great
happy Diwali to you also.
Right. Wishing you a great new year going forward as well. But talk to us about this, right? This growth number of 4% sequential. I've hardly ever seen Yes Bank clock that kind of a growth on a QOQ basis. What's changed? What's caused this optimism?
No, I think we are working in terms of, like, first, if we see in terms of liabilities, okay, there is a huge focus on the new customer acquisition. And that is actually resulting into a very good growth on the savings side. Similarly, our capabilities on the transaction banking, the cash management, providing the digital solution to our corporate customers, and also in terms of opening the current accounts for the retail customer, we are seeing a good growth on this. And we are pursuing a very focused strategy in terms of the profitable growth. We are going granular, but definitely in terms of digital offering to customer, and the customer service is helping us in getting these kind of deposit growth.
All right. Hi, morning, Mr. Kumar. This is Shrishti also joining in. Very solid set this time around. So firstly, congratulations and festive greetings to you as well. But in terms of your deposit growth, I see that it's a 7% jump that you have registered. Give us some more understanding on this number. Was it a one-off that we have seen any quarterly adjustments that led to that, or this sort of a growth is something that we should be looking out for in the times ahead as well?
No, I think 7% growth quarter on quarter is definitely not sustainable. But definitely we are looking for a double-digit deposit growth for the overall number. Some of the deposits also happens like a transitory at the quarter end. But I think the most of the things which are very heartening to us in terms of our Kasa growth, which is more than double the growth of our deposit growth. And that too also in terms of we have been able to reduce our cost of deposit by 20 basis points and cost of fund by 30 basis points. So I think we would continue to execute our strategy of more customer acquisition, providing solutions to customer to get more and more current accounts.
And so give us a sense. So of course, loan book growth is extremely strong. Talk to us whether 15-16% kind of growth over the next maybe 3 to 4 years, is that something that the bank is looking out for now, given that there's a change in promoter ownership as well? Does that give you confidence to grow at that, more than mid-teens kind of benchmark?
No, I think if you are talking in terms of next 3 to 4 years, definitely bank would be in a position to do that kind of growth. But immediately we are looking for a double-digit loan growth, which is coming from 3 of the broad segments. One is our large corporate. On the large corporate, we are seeing a very good demand which is coming. And we have also seen a quarter-on-quarter growth of around 7%. And I think with the pipeline which we are having on the corporate loans, we are expecting like the corporate loans will be growing in the double digit during the current year itself. Commercial banking, which has been a strength of the bank, and we have seen a growth of more than 20% for last 4-5 years. Currently, we are at 16% YUY, and with the pipeline, we are very confident to achieve the 20% YUY growth on the commercial banking. On the retail side, we were pursuing a strategy for not to go for those products which don't give us the margins. They are basically like a new car loan and the prime home loan, where rate of interest in the market is very, very competitive. If you exclude that, Then we have also started seeing good disbursement happening on the retail side. It's a more than 20% disbursement. We are expecting to touch around 5% for the current year. But I think the moment we are able to achieve that double-digit growth in the current financial year, and the way we are reducing our cost of deposit, I think going forward, achieving those 15% kind of growth on the loan side is something definitely bank would be able to achieve.
All right, but Mr. Kumar, the other interesting fact about Yes Bank has been the SMBC taking a substantial stake in the bank. Help us understand how does it change the strategy in any way? What sort of a strategy, or rather goals that you will be setting right now, and how does it make a difference?
With the SMBC coming as the major shareholder with 24.2%, and SBI continue to remain around 10.8%, I would not be seeing a change in the strategy. What I am looking for, more opportunities and accelerating the pace of execution on our strategy. I think our strategy has been very, very clear. On the liability side, go for more granular, go for the retail customer, and this is exactly what we are seeing, that growth on the branch-led deposits and the retail deposits is more than double of our total deposit growth. Similarly, on the loan side, we are pursuing a strategy of a profitable growth, and that's why if you see the currently, we are seeing a little, I would be saying, suboptimum on the retail side. But with the SMBC becoming a major shareholder, we are seeing a very good opportunities in terms of, because they are funding very, very large corporates, and those corporates, we can serve them on their transaction banking, the cash management, the trade finance, and also finance the SMEs who are the supply chain to those corporates. And at the same time, the employees who are serving in those corporates, how we can take care of their requirements, both in terms of retail liabilities as well as retail asset. So I think we are seeing a good business opportunity as well as an opportunity for cross-sell. So with the SMBC coming in, we are definitely looking for more opportunities and accelerating the pace of execution on our strategy.
Mr. Kumar, if I were to understand the one possible concern which creeps out of the numbers, it's the credit cost number. And we've seen a bit of volatility on that number, if I can call it. And that's typically not as well appreciated by the market. How should one look at that number going forward? Give us a sense, because we see some spikes quite often. And this quarter was one such quarter. Also, your slippages haven't meaningfully come off either. So give us a sense on asset quality and both of those metrics. How should one look at it from a Yes Bank perspective?
No, I think first, like in terms of slippages, the slippages we used to have 2.4% of our asset has already come down to 2%. Okay. And if we see in terms of, like, there are hardly any slippage on the corporate side and on the commercial banking. Slippages on the retail, we are seeing a very, very good, I think, outcomes in terms of check bounce rate, the early delinquencies. And I think the assets which have been underwritten in last 18 months, we are seeing a very good quality of those assets. So I think overall, every quarter, there has been an improvement in terms of gross slippage. Okay. Coming to the credit cost, currently we are having a credit cost of 40 basis points. Okay. You are seeing sometimes there is a fluctuation. If you compare the corresponding quarter last year, okay, we were able to release some provisions on the standard restructured book. Okay. Because the standard restructured book moved into the normal standard book. Okay. Currently, the standard restructured book has insignificant, just 200 crores. So we are not going to see any release out of that. The second part is also in terms of recoveries, which we are getting from our ARC transaction with the JC Flower. And when you get the recoveries, sometimes the recoveries may move from one quarter to another quarter. There may be a timing mismatch. And that's why you are seeing some of the fluctuation. But I think by and large, our credit costs would remain within the 40 basis point kind of thing.
All right, Mr. Prashant, thank you so much for helping us with the clarity over there. But thank you for taking the time out and speaking with us as well.
Thank you so much.